It has been a roller coaster period for Fed rate cut expectations, and sticky U.S. inflation is keeping the market on its toes. But what should we expect regarding Fed rate cut expectations for 2024? I'm Christina Marujos. With me today for this special report is our investment analyst, Achilleas Gergolopoulos. So, Achilleas, investors are currently expecting about 2 rate cuts by the end of the year. But has the latest CPI report changed the outlook?
Hi, Christina. Yes, last week's inflation report was quite interesting. Headline CPI eased a bit, but it remained well inside the range of 3 to 3.7% that it has been hovering in since mid-2023. Shelter costs, which we hear again and again in the newswires, is the main problem for the Fed, especially as the April print showed a 5.5 annual increase, far above the Fed's target. As you mentioned, we have seen an aggressive repricing of Fed rate cut expectations this year, from 6 rate cuts expected in January to just 2 this time around, of course on the back of the inflation being stickier.
And now let's look at the week ahead. The FOMC minutes are out on Wednesday, and of course we'll also have a plethora of Fed speakers. Therefore, should markets be on the lookout for any noteworthy revelations?
Since the May 1st Fed meeting, we have seen around 30 speeches from Fed officials talking about monetary policy, and there are 3 main messages. 1, there is a lack of progress on inflation, which explains the 2 rate cuts we just mentioned. 2, there is concern about the ongoing strength of domestic demand, which essentially is fueling inflation. And 3rd, patience is the key message coming from Fed officials. Patience until they feel more confident about essentially the inflation outlook and whether inflation will go towards the 2% target. Especially the hawks have grown a bit wary of the elevated inflation. They started to question the current monetary policy stance. The FOMC minutes published on Wednesday will give us a bit of a feeling of how high the bar is for a rate hike this year, which we know is quite high. In this context, Chairman Powell has already come out earlier this month highlighting that the chances of a rate hike are very, very, very low. This week, we have around 15 appearances scheduled for the Fed officials. Most of the 2023 voters will talk about monetary policy. And the market, of course, will be interested in any hawkish commentary and, of course, any commentary that diverges from Powell's message. Also important this week, we get the preliminary PMI surveys. Any weakness, of course, will be welcomed by the doves and by the market. However, a strong set of PMIs will not be taken lightly by the hawks.
I see. And finally, let's turn to the market reaction, Achilleas. The dollar has had a rather stellar performance so far this year, but looking ahead, how might we see the greenback perform?
Despite its recent, issues, the dollar has been outperforming its main counterparts in 2024. Partly, of course, because the US economy remains the strongest one and because of some risk-off episodes produced or induced by geopolitical events. Until the next Fed meeting on the 12th of June, Fed speakers, the labor market data, and of course the next inflation report will keep the market on its toes. Unless we see a considerable worsening US data, the dollar will remain supported, especially against the euro, as the ECB is expected to start cutting its rates in June.
Achilleas, thanks so much. This was a special report here at Exam.com.